All right. Hi, everyone. For some reason, my webinar started a little bit earlier than expected. I was scheduled to do this webinar at 7:30 p.m., but let's start for now. Anyway, if you attend this webinar and you realize that we're in the middle already, don't worry. This is being recorded, so you can just jump to ashokta.com and read and check out the webinar. All right. So first off, I'm Nikki. Some of you may know me as Nomad Finance Girl. I'm on nomadfinancegirl.com. I'm a Forex trader. I'm also an entrepreneur and a business and finance writer. I'm currently a trainee for Ashok Trading Academy. Right now, I've got, I think, more or less signed up, more or less 30 signed up listeners. So that's so cool. First off, thank you to everyone who signed up for this webinar. I hope you get to learn a lot from what I'll present tonight. Feel free to take notes, jot them down, send your questions in. We'll make this super easy for everyone since that's the purpose of this webinar anyway, right? To educate you guys so that you become better traders, who will someday empower other people. Okay? Ayos ba? Okay. Secondly, I want to thank Ashok Trading Academy for giving me this opportunity to teach this topic. I'll be talking about fundamental analysis. It's pretty fun to teach and help others become better traders. Fundamental analysis is super duper important. So I'm happy that you are here. All right, cool. Um, so guys, I'll make sure to move in an enjoyable pace. Don't forget to take down notes, but don't worry, this webinar is recorded so that you can download the record later through the Ashok Trading Academy website. That's ashokta.com. Also, before I begin, if you can see a chat box in your screen, feel free to use it to send questions. Okay? Don't be shy because your questions might be someone else's question too. So for the benefit of this community, do send in your questions whenever you want. Okay? All right. So cool. Okay. All right. I'll type down something in the chat box so that you'd see what I'm talking about. Okay, so I hope you see this so that anytime you have questions, just type it in. Okay? I like questions. Alrighty, so I guess we're all set. Alright. Fundamental analysis. What the heck is fundamental analysis anyway? I'm sure that you've all heard this before, and I'm sure that you know it's one of the most important aspects in trading Forex, stocks, commodities, whatever, name it. But do you actually know why fundamental analysis is important? Yeah? No? Yes? Okay. Don't worry, that's why I made this webinar in the first place. To show you that the reason Forex traders use fundamental analysis is, well, I'll talk about that later on. But it's very important. It's one of the most crucial things that Forex traders look at when analyzing currencies. Okay? So there are three ways of studying the market. You can either go technical, fundamental, or sentiment. When we talk about technical analysis, this is how we look at charts, we study candlesticks, we look at patterns, we look at price action. Fundamental analysis, however, talks about social factors, economic factors, political factors. And sentiment analysis basically covers how much of the trading population would go long, would go short, how many are bulls, how many are bears. So tonight we'll be focusing on fundamental analysis. All right. Maybe next week I can cover technical. Why not? I love technical analysis as well. Do you want me to cover tech analysis for free? Well, I always do stuff for free for you. Sure, I'll cover technical analysis next week. But for now, fundamentals. Okay. So fundamental analysis deals with social, economic, and political factors. It basically covers everything that happens in an economy that can trigger changes in the supply and demand of its currency. So, to further explain this, we need to go back to Economics 101, supply and demand. Do you miss, do you miss supply and demand? Because if you do, I take you back to economics, basic economics. Supply and demand. Supply basically, in its most basic sense, is the amount of resources, currencies, also services available. Demand, on the other hand, is the desire of people to buy those commodities. So, say if you are shopping in the mall, or if you're, say, let's go for iPhone. iPhone 6 was released almost a year ago. iPhone 7 will be released later on this year, right? So if iPhone 7 gets released, the price of iPhone 6 will go down. Why? Because the demand for iPhone 6 will go down as well, because everyone will be flocking to iPhone 7, right? So some people wait for the new brand to come out before they buy the brand they've always wanted, right? All right, cool. So why are we talking about supply and demand in the first place? What does this basic economic thing has to do with fundamental analysis? Well, you know what? Supply and demand, they, these are factors that affect the price of currencies. And in Forex, we really, really care about the price of currencies because that's what we trade, right? As such, currency pairs in Forex trading, they fluctuate because of supply and demand. That's why fundamental analysis is very important in Forex trading. Well, Forex, because in Forex, we use fundamental analysis to tell us why currency prices change. Why do we need to know why currency prices change? Well, we need to know the why behind the movements in currency prices to help us make decisions. In trading, we make decisions every day. Should I buy this? Should I sell this? And if you don't make decisions with actual reasons, you're basically just gambling, right? So fundamental analysis will give you the reason behind your trading decisions. Okay? Cool? Okay, so not receiving questions right now, so I'm assuming that I can move on. Okay? Okay. All right, so again, going back to fundamental analysis, it will give you the background of price changes. If you're aware of the reasons behind price volatility and price movement, it would be easier for you to make smarter decisions when you trade. You won't just press the buy button just because it's blue or the sell button just because it's red. You buy something because fundamentals are showing this and this, right? In Forex, we need to know which economies are doing well and which ones aren't. And how would you know what makes an economy good and what makes it bad? Well, through fundamental analysis. There are many factors that will tell you whether an economy is doing well or if it's not doing as well as the other economies. And it's like to help you understand this further, I will give you a prime example. Let's use USD, US dollar, the greenback or the buck. As you can see, we have rise in employment. The US economy values jobs. They like it when people get jobs. Why? Because when there's a rise in employment, more people earn money. If more people earn money, more people get to buy stuff. Remember, US is a consumer's country. They like shopping. If they buy stuff, it drives expenditure and it drives businesses. Businesses become happier because they thrive in an economy where people have jobs. And if businesses are happier because they're getting more profits, they get to pay taxes, more taxes to the government. And the government use taxes to fund their projects, pay debts, etc. When they get to pay debt and fund their projects, the economy grows. But if the economy grows too fast, the government needs to control inflation. Because if the economy grows too fast and inflation happens, people will, have a hard time controlling their money as well. So what do they do to control inflation? They raise their interest rates. Now, if you are an investor from another country and you see that US will be raising their interest rates, would you invest in that currency? You probably would, because if you invest in something with high interest rates, you'd get something bigger, right? Right? Cool? Yeah. Okay. So to help you understand this further, let's take this example to a more personal setting, okay? As you can see in our example in USD highly values employment as a leading indicator for their economic health. But however, this same factor may not be as important to other countries, like say Japan. It's much like, okay, let's use love. I know the men in my listeners understand this. Um, if you are, for example, or I don't know if you do this, say you're courting two girls. Yeah, two girls. I don't think you would court them in the same way, especially if they have two different personalities, right? Currencies also have particular personalities. For example, the one of the girls may be artistic, while the other one may be sporty. So you probably wouldn't court the artistic type by bringing her to a basketball game. Or you probably wouldn't bring the sporty one to an art gallery, right? I mean, they might get bored. But at the same time, they may like those things too. However, they'll just get more excited if you bring them to places that would fit their personalities, right? Well, the same thing goes for currencies. We look for factors that dictate the economic strength of a country. If these factors are good, if the figures given are good, we can say that the economy is doing well. So in US, they highly value the data that involves jobs or anything that dictates that there is a rise in employment. Then we would look at that. But the same data or the same factor, which is rise in employment, may probably isn't as important to Japan. So it's important, but not as important. So we have to know which factors fit particular currencies and look at them every time they're released. Okay? Cool so far? I suggest you write down your questions so that you can also email them to me later on. Okay? Okay. I'm just assuming that they're all okay. Okay. Well, in Ashok Trading Academy, we think fundamentally and trade technically. You see, fundamentals cannot really give you the next price movement of a pair. Instead, technical analysis does that for you. It helps you find the next price move of a pair. But fundamental analysis won't do that. It will only give you the background, the economic landscape that can guide you in your trading decisions. Okay? When you read fundamental news, RBC, this type of lives by analysis, by analysts, they usually use should or may. Like for this example, the analysts here used may, right? Because fundamental analysis is, like driving. Okay, let's just use driving as an example. Before hitting the road, you'd want to know the weather conditions first. You would check ways to know the traffic conditions as well. When you do these things, you make better decisions. You either wait for the rain to stop pouring, or you take a shortcut, or you avoid certain roads, etc. Fundamental analysis will do the same. It will give you the economic landscape that can guide you in making trading decisions, because it will show you how an economy is doing. Fundamental analysis basically will give you future economic conditions. Okay, I hope so far that you get what I'm trying to say here, because in the next few slides, I'll be talking more about the technical stuff in fundamental analysis. But don't worry, again, I'll try to keep this enjoyable, keep this super easy, super basic. Okay? There's more to fundamental analysis than everything that I've said. I hope you do your research on your own as well. But maybe in my future webinars, which are also free, I can talk more about fundamental analysis. But right now, let's just keep things simple, keep things light, keep things easy. Okay? So I hope you have your questions. All right? Okay. And just email them to me later on. All right. Okay. Next off, fundamental analysis will show you where a currency is currently standing. It will tell you where an economy currently is. Is it in a recession? Is it recovering? Is it growing? Or is it in a slowdown? Now, if you know that an economy is in a recession, would you buy that currency? Or if an economy is growing, like the Philippines currently is in the growth stage, would you sell Philippine peso? Well, I don't think you should, right? But the question is, how would you know? How would you know where an economy currently is? So don't worry, there are particular factors that can guide you. These factors include economic growth and outlook capital flows. It also includes trade balance and present and future governments. We'll take these one by one. Okay, so I see that there are more attendees coming in. Again, for some reason, there was this technical glitch that started the webinar 30 minutes earlier. So you're in the middle of the webinar. But don't worry, this is recorded, so you can go back to the record. I'll be uploading it tonight through the ashokta.com website. Okay, it will be up before 9 p.m. Promise. Okay, so I hope you stay and keep your questions and just send it to me later on, or you can use the chat box if you can see it. If not, just write it down and contact me through my Facebook page or my email. Right? Cool. Okay. But you're in the important part of the webinar. Don't worry. Okay. So first off, economic growth. Just remember, everything is connected to everything else. Again, let's go back and use our courtship sample earlier. For example, you chose the sporty girl. She values healthy eating. She values, say, exercising and playing volleyball. You want to make this girl happy so that she becomes your girlfriend. So to do that, you decide to take her to dates that only provide healthy food, or you ask her to fun runs, or you take her to hikes, or you support her in her volleyball games. You see, economies work in the same manner. US, for example, becomes happy when more people get jobs because more people get to spend. When more people spend, companies become happier because they get more profits. Since their profits increase, they get to pay more taxes. Now, governments, they like taxes, right? Um, when governments get taxes, they use these taxes, well, at least if they're not corrupt, they use these taxes to pay off debts, to build programs, to fund projects. So if a country has more money to fund their projects, then it lives on a healthy economy. In return, a healthy US economy attracts investors to put their money in US dollars. It makes total sense, right? But the same connection probably wouldn't happen in another currency like say CHF, because again, currencies have particular characteristics. Okay, clear? If you don't have questions, cool. But if you do have questions, that would be cooler. Just write them down or use the chat box below. Again, for the attendees that just got in, uh, apologies, there was a technical glitch. The webinar started 30 minutes earlier on its own. Don't worry, this is recorded, so you'll be able to get the earlier parts of the webinar through the Ashok TA website. Just check it out, ashokta.com. But do stay, because we're in the important part of the webinar already. Okay, cool. Okay, now we won't move too far from here. I already talked about investors investing in healthy economies. So this leads me to the second factor, which is capital flows. Okay. You see, the world is flat. Just remember that. The world is flat. People are now able to invest in different things. Things outside their countries, things you find in the internet, even other currencies. So if I see that, for example, the New Zealand dollar is doing well, I'd get attracted to NZD and invest in NZD. If more investments are coming into the currency, then they'd be happy, right? New Zealand also invests in other countries, but they'd be happier if they get more investments. If more capital flows into the country compared to the investments that go out of the country, they'd be happier since they'd technically become richer. And like dominoes, if they are wealthier, more investors flock into NZD, making NZD more and more attractive. It's kind of like love, you know. Oh God. Um, it's kind of more enjoyable if the other person loves you more than you love him. Kidding. Okay, just trying to keep things light because we're in the heavy part of the webinar. But again, I'll try my best to keep this super duper simple because that's what education should be anyway. Just simple because trading should be simple for you, okay? Okay. Anyway, this is recorded so you can always go back and play it again and again and again, you know, and get sick of my voice. Anyway, all right. So that's capital flow. So more investments in the country, there would be higher currency demand. So would you buy a currency that has more investments coming in? You should. Okay. Next, trade flows and balance. Okay, I like this order because it's easier to understand. Now that you know what capital flow is, you'll definitely understand trade flows and balance. Okay? So it's pretty much the same. Exports talk about the goodies you sell, and imports are the stuff that go into your country. Exports, I'm selling my stuff. Imports, I'm buying your stuff. Now, if you have more exports than imports, you should be happy because you're getting more than what you are giving. Parang love. Okay? For example, if an Australian-made product is booming in other countries, they'd buy more of that product. So to get that product, you know, that product that Australia produces, these countries have to pay in Australian dollars, making the demand for AUD higher. Clear? Okay. Again, if for example, there's a really neat Australian product being delivered to somewhere else, and there's a high demand for that product. To get that product from Australia, they have to pay in Australian dollars, which makes the demand for AUD higher. AUD, Australian dollars. However, on the other hand, if Australia imports more than they export, meaning if they buy more stuff from other countries, they will experience a deficit. You know, a deficit. That means you don't like my stuff, but I like your stuff. Because what happens when a country is in a deficit, in a trade deficit? For example, AUD. If Australia imports more than they export, they will experience a deficit because to import products from other countries, they have to exchange the currency, which is AUD, to other currencies, pushing the demand for AUD downwards and the demand for other currencies upwards. So, for example, if AUD, for example, likes cars from Japan, and they keep on buying cars from Japan, and they're experiencing a deficit because they're buying more stuff than they're selling more stuff, then uh, that would push AUD down because they're exchanging it for JPY, Japanese yen, and that would push Japanese yen up. Because in order to buy a Honda, for example, from Japan, I would pay in Japanese yen, right? Okay, cool. So, if you know the trade flow and balance of a country, you'd know the demand for the particular currency. Now, if you know the demand for a particular currency, it would help you a lot in making your buying and selling decisions, right? Because would you buy a currency that's experiencing a trade deficit? I mean, why would you do that, right? When the country is exchanging their own currency to another currency to buy products from other countries, why would you buy that currency, right? You wouldn't. So it's important to know the current state of a country's trade flows and balance. Okay, but then again, as I mentioned earlier, this is just one of the factors that affect currency, and you have to know currencies well. You have to know if trade flows and balance is important for that currency. This is important for uh, Japan. It may also be important to commodity currencies like AUD, NZD, and Canada. I'll be talking more about commodities maybe in uh, maybe next month after I talk about technical analysis. All right? Don't worry, that's gonna be a free webinar as well. Okay. Okay. So, lastly, we have present and future governments. Um, Politics play a role in fundamentals also because governments can basically change the rules of the game, right? This also includes wars, natural disasters, and it includes how the government administrations, the present ones, react to these events. So, if I'm an investor or a business person and I trust a particular government, I would probably invest in their economy because I would know how they would react to particular things. So, say, for example, if I trust the Chinese government, and I'm a big business person, I'd probably put my money in China and have my buildings built there and get employees from China because I trust their government and I trust their laws. Or that's an example. Okay. A government can also easily change money flows by creating laws. Because they can. They just create laws, right? And these laws can affect trades directly. What if, for example, this is just an example, if the Philippines, for example, if the government of the Philippines decides to create a law that bans us from trading with country X, Y, and Z, that would definitely affect the demand for the currencies, for country X, Y, and Z currencies. Because they wouldn't be able to sell their products to us. And the same way, we wouldn't be able to sell our products to them, right? Okay, so you know what? These things, they ultimately affect the health of currency. So being aware about these things would make you help better trading decisions. Okay, so I've got all of these fundamental hullabaloos for you, but then the question is, how would you understand fundamental analysis anyway? Well, you know what? Good news for active readers. And a challenge for those who don't read often. The only way for you to understand fundamental analysis is to read and write like a gazillion times. Yeah. Um, Reading finance and business articles daily may be daunting at first. When I started around 3 years ago, I never knew that I was going to be a business and finance writer. because I hated math. I hated seeing numbers. So it was a challenge for me to try to understand what the hell is she saying? Why is she saying that this is falling something something percent? Like what? Like I don't want to see numbers. I don't want to see charts. And I never knew that I would someday create charts for people and write numbers and stuff and actually enjoy it. But then when you read news, when you read at least two news pieces a day, you eventually get into it and eventually it becomes a habit. You see, trading without the economic landscape, it's like driving during a storm. Pretty hard, huh? So hopefully starting tomorrow morning, you read at least two fundamental news pieces. You can get them through reliable websites like investing.com, Bloomberg, and all that. Fortunately, you can also get news from Ashok TA. That's ashokta.com. I also place them on my Facebook page. That's Nomad Finance Girl, facebook.com/hello NFG. So you can get news pieces from there. Um, we also use forexfactory.com. The figures, the data, the economic data are released by the second. When Forex Factory says that it will be released by 8:30 p.m., it will be released by 8:30 p.m. Okay? Wow. So actually that's the end of my webinar, but there are still attendees coming in. Again, for those who signed up, apologies, there was a technical glitch. My webinar for some reason started on its own. It started 30 minutes earlier, but don't worry, this is recorded. So you can download the record through the Ashok TA website. As soon as I finish this webinar, I'll be uploading it. So it'll be up before 9 p.m. tonight so that you can listen to it over and over again until you get sick of my voice. Okay? So again, if you have questions or if you want to learn more or if you have suggestions like Nikki, next time teach us about blah blah blah, just send them to hello@nomadfinancier.com, fb.com/hello nfg, or at hello nfg through Twitter. Okay, cool. So again, thank you so much for listening. You're all awesome. Again, sorry for the technical glitch. Don't worry, it's recorded. And next week, maybe, just maybe, I can talk about technical analysis. I love technical analysis and I love how you can merge it with fundamental analysis. Remember, think fundamentally and trade technically. Okay? All right. So I hope you learned a lot. And don't forget to send in your suggestions. I'd love to hear from you. I'd love to get to know you more. Okay? Cool. Awesome. All right. Again, thank you so much. Bye.